Morning, everyone. Welcome to this morning's edition of the NPC Markets Morning Call. It is the 8th of May, 2026. I'm Mark Gardner. Stocks took a breather overnight. Basically, there's doubts around the Iran deal. Whether there was a deal really at all. I mean, he has announced about 20 peace deals along the way in 60 days. So, everyone's waiting for this 48-hour. It was 48 hours yesterday, and apparently this morning there's still 48 hours to go, so they keep extending it. Iran's supposedly agreeing to one pages, etc. But realistically, we need to wait until we see them, some form of legitimate and not just and not just a Trump primary source where the Trump administration's just essentially, managing the media very well, which they have been. But oil prices did go back up to around that $97 mark. Nvidia was up overnight. These guys, which is in the top left corner there. The chip stocks are on the left-hand side. We did have those companies have been absolutely on fire. Broadcom, AMD, Micron, and Micron's up around about it would be 40% in the last 3 weeks. And Intel had an up 18% day. AMD had an up 18% day. So pretty legit for those guys. Well, pretty, for them to have a breather is not the worst thing in the world. I wouldn't have thought. We saw software names attract a lot of a bid tone there. You can sort of see in the dark green in the middle there. Palo Alto up around about 7%, and then you had Intuit up about around about the same. AppLovin up 6%. CrowdStrike was up. So the software names, the SaaS apocalypse stocks all had a really strong bounce, and I don't necessarily know what that's about. There was no singular news story that I could find generally about that, but yeah, definitely finding a very strong bid tone, and I would, it could be shorts covering, it could be anything really. So, but the rest of the market not doing particularly well. So, look, this earnings season so far, headline blended earnings growth, which everyone keeps quoting, is 27.1%. That's a startling figure considering we were hoping for 12% earnings growth this across the board. If you actually take out X one-time accounting items, so basically everyone's got a piece of Anthropic, everyone's got a piece of, either ChatGPT or SpaceX or whatever. If you take out all those massive markup valuations, I mean, Google and Amazon particularly would have had, and Meta would have had massive write-ups. As you can see, sort of nearly 38 billion for Alphabet, 17 billion for Amazon. Meta had an $8 billion tax benefit. So look, that actually brings it back down to only 16%. And then if you remove the hyperscalers, we're at 11%. So, whilst everyone's running around saying that, that this has been an unbelievable earnings season and they're quoting that 27.1, if you actually strip out the hyperscalers and you strip out those massive off-market private deals like Anthropic and things, and holdings in Anthropic and things, it's not that great. So, the S&P 493, which is the Mag 7 reports, Mag 7, you're looking at around about that 10 to 11% mark, and then a lot of those earnings were driven by data center build out and spending. So they're kind of because of the the hyperscalers. So not you got to be a little bit careful about the about these headlines, because that 27 number, I was shocked. Like, I mean, how can you have a double? The economy can't be going that well. But yeah, and apparently GDP growth, roughly around the 35% mark of GDP growth in the US at the moment, is to do with data center expansion. So, GDP not even going as well. It's a huge push. It's, look, everything's pretty strong at the moment, obviously, but we drifted back, which is probably fair. We've been on an absolute tear the last few days. The charts are starting to look a little bit overextended. The ASX probably playing catch up here in Australia. Should have a reasonable morning this morning in Macquarie. It recorded its second biggest annual profit ever, underpinned by surging earnings in its commodities and markets division, and strong performance fees from its asset management business. So they declared a dividend of $4.20, up from $3.90, and then they basically smashed expectations. So that's only just come out, and they'll be very happy with that. I'm assuming this morning. Personally, I think that a lot of it's priced in because they watch the earnings go in the US for all the banks, and the Macquarie's more a US style bank. So probably be thinking maybe even watch how it opens and maybe sell into it potentially. But they are great at commodities, and there was big fears around their head trader retiring and moving to Dubai. I'm assuming for tax reasons, but who knows. But look, the one thing that Macquarie's shown over the course of decades is it's a factory. It just, that production line just keeps going. So expect a little bit of movement from there. Look, commodities and things like crude rallied back a little bit, but only down for about 5% for the week. Oil eked out again. Gold eked out again, up 1.5 for the week. Silver another 2, which is pretty surprising considering copper and platinum are down actually. So a little bit of a bid tone still in silver there, and you saw uranium just sort of pull back. That was largely, that 3.5% is probably half of yesterday. That was a massive move in that uranium ETF the other day. But overall, no, I mean, silver, the real winner on the week, and we're sort of back towards we're sort of knocking on the door of 80 here at the moment in silver. So, and the chart looking actually pretty good after that, fairly dramatic pullback and those wildly volatile times. So, overall, it's been a very big week. It's surprised a lot of people. I think overall we're now seeing at these current valuations the Schiller PE ratio now sitting at levels not seen since 2001, which is the seasonally adjusted the cyclically adjusted PE ratios over 10 years. So market is stretched valuations at the moment. So we and look, Trump's also had his second tariff executive order tariff thing torn down as well by the Supreme Court overnight. And there was sort of breaking news, which they're trying to say they were defending themselves, but the US has struck Iran in the last hour or so as well. Haven't seen any movement generally in crude prices, I've got to say. I would have expected more out of it, but I think Bloomberg broke that story, and then you had. And then you basically had, they've come. The Pentagon's come out and said they were defending themselves. It wasn't a unilateral strike or anything like that. So so buy the dips, our strategy. We sort of think this market's at highs at the moment. So we've got a strategy here where you can buy the dip in the S&P in the next 6 months, from the middle of May to the middle of October. The lowest Monday close will be your entry price, and then it's a 3-year investment in the S&P index. It's leveraged about 6 around the 6 to 1 mark, using call options. So the leverage works on the upside, not the downside. So scan that code, have a look at that, because we that closes next Friday. But realistically, the amount of demand we've got, we're going to need, for new accounts or new clients, you're going to have to get in your details by Monday or Tuesday at the absolute latest. It is available for retail, and it is available for obviously for sophisticated investors. So you can invest if you're retail. If you're holding S&P ETFs, this is really a bit of a no-brainer, I've got to say. So scan the code, and then have a look at buy the dip strategy, and there's an explainer video, and there's a PDF there. If you're interested, just fill in the form and we'll get rolling straight away for you, because there is essentially less than a week to go. We've also got a webinar coming up next Tuesday. If you just go to mpcmarkets.com.au/webinars, you will be able to register for that, obviously, or you can scan the QR code as well. And it's just basically some, Kai and I are from a background of, or Kai from more so from high frequency trading, algorithmic trading, proprietary trading. I was a proprietary trader for 20 odd years. Worked for some of the better, individual traders in the market. So we're going to bring the experience of those institutional and professional techniques. So to give you a few tips, because a lot of people are fearing a fall at the moment, and the webinars are, around, what strategies you can use, some asset classes or alternative investments and structured investments you may not have heard of. That you can use to reflect things and avoid the volatility and lower your risk and keep the returns. So, bit of an educational one, not necessarily. We'll have a few stock tips and things in there and suggestions, but and we'll be answering questions in a live Q&A as well. So you can register now. That's next Tuesday, or you can get it on demand after as well. Just register, and then you'll have access to the on demand after that. So. Guys, make sure you watch Bulls versus Bears this afternoon. Fairly chock-a-block. Myself, Jonathan Takadina, and Kai Chen will be doing our weekly podcast. We'll cover the weekend markets, etc., and a few in-depth topics. But apart from that, guys, have a great weekend, and we will speak again Monday.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.